QuickBooks Pro Desktop 2021. Pay sales tax. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. We are in our Get Great Guitars homepage. We currently have the open windows open. You can open the open windows by going to the view drop-down and selecting the open windows list. We've been collecting sales tax as we go. We're going to go through the payment of the sales tax at this time. To do that, let's go through the setup process because that'll help us to understand kind of the schedule that would be there for the payment of sales tax, which can differ from place to place, considering the fact that in the United States, sales tax is a state and local tax, not a federal tax, and therefore we'll have some differences in terms of how the payments and when the payments will be set up. So let's go through our setup process just to review. If we go to the Edit dropdown, go to the Preferences, we'll recall that in the Sales Tax tab down here, we're going to go to the Company Preferences. We had to turn on the sales tax to say that we have sales tax, typically applying the sales tax to inventory items and not usually to service items. In the United States, we set up an item, and then we have the sales tax codes. Right now, we're kind of concerned down here at the bottom level with regards to when do we owe the sales tax. So basically, if we think about the sales tax in theory, we're saying the government, the state and local government is theoretically saying it's not you that we're charging the sales tax. We're not charging the company the sales tax. We're charging the customer the sales tax. They're just making the company the collection. They're making the company the collection person that has to take the money from the sales tax people. We're the tax collectors, and then we have to distribute it to the government. So how will that work logistically? Because we're going to have to collect the money for them, and then we're going to have to pay it to them, of course, in some future point in time. So the question is, how often do we have to do that? We're gonna have to collect the money, and then do we have to pay the money like the month after, or do we collect it for a whole quarter and then pay, quarterly or yearly? So that's what we have on the right-hand side. It will often depend on how much revenue you have. So the state and local governments will differ, and then it'll differ in terms of how much revenue you have oftentimes. If you have less revenue and owe less sales tax, then they're more likely to say, hey, you can do it annually. Just collect it for the whole year possibly, and then pay us all the sales tax that you owe by, sometime in January, most likely, right, of the following year. Or collect quarterly every 3 months and then pay us, at the beginning of the next quarter. So for the first 3 months, January, February, March, and then pay us by the end of April or the 15th of April, possibly, the sales tax that you owe. Or they might say monthly, which is what we're going to do here, even though we have a fairly low amount of sales tax, or may have a fairly low, in any case, we're going to do it monthly, which means we're going to be collecting for the month and then paying the month after. In our case, the month of January we've collected, and then we're going to pay the month after, which is now February. So now in February, we're going to be paying the sales tax that we collected for the sales made in January. Then we also have the question of, well, what if I make sales on account? I've been selling things, but I didn't get the money yet for those sales. Do I have to pay the sales tax on them, even though I haven't got paid yet by the customer? And so typically, I'm going to keep it on the accrual system, which would be yes, or we'd have down here saying that no, it wouldn't be until we get the money that we actually have to include it. So in other words, if I had a sale that was made in January, then do I have to include that in the sales tax that I owe, that I have to pay in the following February? Or if they don't pay me until February, even though I made the sale in January, maybe I shouldn't have to pay the sales tax until the month after February, because it should be part of February sales tax. So that's going to be the difference between those two. Again, it'll change from state to state, locale to locale. We're going to be on a monthly basis. So we have completed January. We're going to be paying for February at this point. If you go to the lists drop down and go to the chart of accounts, you'll recall, lists, and then you're going to go to the item lists. We had set up the sales tax item. Here's going to be the sales tax item we set up. We've been collecting then 5% sales tax. The rate is something else that will differ from place to place. Okay, so closing this back out, let's take a look at our reports. Go into the reports drop down, go into the company and financial. We're going to go on down to the balance sheet. Within the balance sheet, let's go to the Customize Reports up top and change the dates from 01/01/21 to 12/31/21, and then say OK. And down here, we're going to have the payable. So here's the sales tax payable that we have thus far. If I double click on the this is the sales tax payable. On the sales tax payable, then we have the detail for it. Now, these are either invoices or sales receipts that resulted in the sales tax, and they were only the invoices and sales receipts where there was a taxable item, in our case meaning inventory. If I double click on one of these, for example, we will then see the tax calculation down here, the 5% on the sales tax on the sale. So every time we made a sale then that was on a taxable item, we had to tack on the sales tax. What does that mean? It means that when we recorded this one being a sales receipt, unearned, basically cash, undeposited funds went up. The others, it went up by the 420, the amount we collected, but sales only went up by 400 because that's the only part that we actually charged to the customer. The $20 sales tax was charged not by us, but by the government. We're just the collection agency. So that $20 increased the payable that we have here. So now we have this payable that has been increasing. Now we got to pay the government. So let's take a look at this and shorten the date down to 01/01/31. This is the money that we had collected for sales taxes for the month of January, and now it's the month of February. So we're gonna now pay off the sales tax that we had collected in January, and we're gonna pay it off in February. The sales tax that we're collecting in February, we're gonna assume for our circumstances we don't have to pay them until March. This is kind of a generic setup. You gotta, again, standardize your setup to wherever you are, but that's gonna be the basic idea or concept of it. So then we're just basically gonna write a check now to the government for the amount that we collected, that they forced us to collect on their behalf, of that $1,985.70. So if I go back to the balance sheet, they give us a little tool to do that. We could just write a check, to do that, decrease in the checking account, decrease in the payable. But they have this little sales tax manager tool to help us out with that. So we can select that and say, we got the sales tax manager tool. Now you can go through some of these tool items and look into it. So you could calculate the sales tax liability, basically printing that same report that we looked at. And the sales tax revenue summary, you can take a look at these reports. View sales tax items. So if I was to select this item, it's going to show us our item lists. We only have one item because we're kind of assuming we're in one state. If you have sales tax for multiple states, if you're selling things across state borders, then your sales tax could be more complex, and you want to make sure that you're picking that up. Open sales code list, I won't go into that. Adjust sales tax due, so if you need to make an adjustment, you can do that here. So what I'm going to then, and if you want to go to the preferences, again, you can, this is kind of a shortcut to that same preferences area that we had from the edit drop down to the preferences settings. Closing this back out, let's go ahead and pay the sales tax. So we're going to say that we're going to pay this. The check date, I'm going to make it on 02/28/21. And then I want to show sales tax due as of 01/31/21. 01/31/21. So that 1697.70 is what should have been in our transaction reports had I had the dates correct. So I'm just going to check that 1697.70. If I go back to that transaction report that we had open, you'll see it would have been correct, but I changed the dates to the proper dates for the month of January, January 1st to January 31st, 2021. So this is the amount that had accumulated for the month of January that we're going to be paying in February. And that matches the 1697.70. So that looks good. If I go back to our sales tax and do that again, I'm going to say pay sales tax. It's going to be for the check date 02/28/21. And we're going to pay this through the month of January 01/31/21 because we want to pay this amount that we accumulated in January that we're going to pay in February. Now, it gives us a check number, same kind of thing with the check numbers. The check number means it's going to decrease the checking account, but if it's not a check, if you pay electronically, then you put something other than the check number here so that it won't create a check. You can print the check out of the system in the same format by selecting the to be printed item here. So we can have any adjustment that would need to be made, you can select the adjustment and then put any adjustments that need adjusting at this point here. So that's going to be it. Before I say okay, we got to check it off. So I'm going to check it off and then say okay. So we're going to say okay, and then I like to go to the checking account in order to check it. So I'm going to close this back out. You can go to the check register. I like to look at the check register by going to banking, use register, or I like to go to lists, chart of accounts, And then within the chart of accounts, I'll double click the checking account, opening up that particular account. So there it is. There's our payment. Notice once again, it's in format of a check, but it has a little different symbol down here, which will indicate that it went through that kind of payment process. We used the tax payment little module to do it. So, and it automatically went to the department because that's the vendor we set up when we set up the item. So if I double click on this, we will open up then a check. So even though we used that tool, it basically generated a check. Same kind of thing with the bill pay, however, in that the bottom of the check is a little bit different and indicates that it is sales tax payment. So it's a check kind of form. If it wasn't actually a check that you wrote, you would have something other than the check number and the check number. And then on the bottom, it's going to indicate that you used that kind of sales tax formula or tool or module in order to do it. And then, of course, it picked the vendor. We didn't have to pick a vendor when we wrote this check because when we set up the item, we set it up going to that vendor. This is like a kind of just a made up vendor, but the vendor bit would be who you pay in terms of the tax agency that you would be paying depending on your state and locale for the sales tax. So closing this back out, and then I will close this back out. Let's go to the balance sheet and check out what we have. Balance sheet going back up top, checking account, double clicking on the checking account, scrolling down, we see then we have the sales tax payment here, and it's a check again, but look, you can see that we have a different type that's indicated. It says sales tax payment. So it's going to tell you, that's basically telling you, hey, it's like a check, but it's really went through that sales tax module, which is nice again that you have that little differentiation even in like the GL type of report or transaction report. Going into it, you get to that same check. Closing this back out, and then if I go down to the sales tax payable, it has now decreased to this $288. There's still something there because that's the sales tax that we collected in February. So we collected that sales tax in February. We only paid off the January sales tax. We will pay off the February sales tax when due, which is going to be in March. We'll pay it off in March. So if I double click on that there then, so we see the activity here. We see the activity accumulating from January all the way through February, and then we paid off the January activity. So that 1,697.70 is equal to our last transaction in January. So this January transaction in the running balance is what was due in the end of February, which we paid off. And then the transactions that have happened in February, which are accumulating up, if you add these three up, they add up to the 288, has not yet been paid, and that will then be paid in the following month in March for our case. Okay, so that means, so if we go back to the balance sheet, this is what we have thus far. If you're following along and you want to check your numbers, this is what we have thus far on the balance sheet. We have no change to the income statement, and you might, this whole thing on why isn't there a change in the income is a little bit confusing. You might say, well, why? When was the income statement affected by this transaction? Isn't it an expense at some point in time? And the answer is no, it's not an expense because, again, the IRS is really treating us as just a tax collector. So we didn't record it on the income statement, like we didn't record the revenue that we collected as revenue and then the sales tax as an expense, which would net out to kind of like the same thing. But rather, we recorded when we collected the money, we recorded it as a liability, as if it wasn't us charging. We didn't charge that money. It's not our sales price. It's us just collecting money from the customer that has nothing to do with our sales, really, even though it got tied to it. And we increased the payable for it, and now we're paying it off. So the whole thing with the sales tax, even though it's kind of connected to our sales, isn't included in sales. Sales tax expense, there is no such thing as sales tax expense, because there's no sales tax income, right? The income went to a payable, and now we're simply paying off the payable. The idea being that the income is not income to us, and the expense, therefore, isn't an expense. We're just the collection agency. We're just the middleman collecting money because we're forced to. So now let's take a look at it at the trial balance by going to the reports drop down and going down to the accounting and taxes, changing the trial balance dates from 01/01/21 to 12/31/21, and here's where we stand in terms of the trial balance.